Welcome to the Private Lenders Podcast with your host from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Welcome back to the Private Lenders Podcast. I'm Jason Balin from Hard Money Bankers and live out in Knoxville, Tennessee, Chris Davis from Approach Lending. Definitely looking forward to our conversation. Chris, how are you?
Doing well, man. That's a funny little intro you got. You were young in some of those pictures, buddy.
Still am young, baby. Still am young. Well, that's a good segue to start off because I was going to say, one of the things I admire about you and your operation is, you're on the younger side for being a hard money lender or a private lender, similar to how I was, but like you're grinding regularly. You're super dedicated to this business. I mean, when Chris and myself, my business partner, Chris, and myself started Hard Money Bankers, we were in our latest 20s. And fast forward 17 years later, not in my 20s anymore, look a little bit older, but you're still kind of on the younger side. Like what was that aha moment that motivated you to wake up one morning and be like, I'm going to start a hard money lending company?
I was flipping houses mostly through my late 20s, but not really dedicated. Now that I'm dedicated to a business, I know what being dedicated looks like. So I was definitely not dedicated, kind of drifting. Brother, who's now my partner, kind of teed up an opportunity with someone he knew to go work for them. And when I was working for him out there, I kind of I don't know what it was, but some match lit where I was like, okay, I'm motivated. I got to work directly with someone who's building very large mobile home parks, RV parks. And I saw what his day-to-day looked like. And it was like, okay, this is what it takes to run a serious business. And I wanted to do it. And that guy was super supportive of getting me out of his office. Actually, he's like, I don't really want you to work for me. Go figure out what it is you want to do. And then just started pen to paper. I had actually tried lending before with some capital, had no idea what I was doing, but I'd done it when I was flipping for someone. And then with my brother who really helped push me into this.
And then so when did you actually write your first loan?
March 31st of 2022, just over 2 years ago.
Pretty much the exact date, just like I remember our exact date in December 2007. That's a good sign. So just over 2 years ago. And then 2 years ago, what, you were exactly 30? Is that right?
Well, I'm 33. Yeah, I was 30 at the time, turning 31. Yeah.
So you're 30, turning 31 at the time. Because, let's be honest, the demographic of a hard money or private lender today is a little bit different than it was in the past. But back in the day, it was rich attorneys, older attorneys that had accumulated some wealth, and they would just peer-to-peer lend it, and they just lend it out. And then you got these young whippersnappers, which is what I was called back then. Chris and I myself were both called that term pre-YouTube. And, you're going in and you're trying to, find deals and raise capital and do all these things. What's been the hardest challenge of your business so far?
How much administrative and back end there is to this business, how many things you have to monitor and pay attention to, or the whole thing will just implode. I think people hear lender and they're like, oh, that's got to be so easy. You're just lending money, right? Yeah. It's passive. There's nothing passive about this part of the business.
Yeah. And I think that's a true statement. And, both of us are, part of the Hard Money Mastermind, and we know quite a bit of private lenders and hard money lenders, it's safe to say, throughout the country. And I think there's a special trait that we kind of all have of being super motivated and knowing that this is not a passive business. And I think when folks try to get into this space because they think it's easy, they realize it's that's not really what I signed up for.
Yeah, that's exactly right.
For good or bad, but let's be honest, every business is hard work, right? There's nothing that if listen, you could do this part-time and you can go find crappy deals and potentially raise the wrong capital and not know how to structure deals. And it's not going to last all that long.
No.
So besides, obviously and I agree, the administrative stuff is tough. And, sometimes you question like, hey, am I even in, do I want to continue to do this? But there's obviously like highs of this business that you enjoy. Like, what's one thing you really do like about this business?
Well, there's really two things. I do love like solidifying a deal with somebody. That's a very interesting high that I've ever felt. And then now we're at the point where we have an employee, and it's really awesome to have that experience of learning how to be a boss and train someone. And I've never done that before. So that's something that I'm really enjoying, because that's a challenge in and of itself. You don't just wake up one day and know how to do it,
Yeah, no. Yeah. They don't teach that in school.
No.
They don't teach, they don't teach most of this stuff in school, which is fine. But like, that's just, you learn from experience on some of this. What's your current portfolio look like, unit wise, loan volume wise, things like that?
So we're at like 9.8 million, and 10 million has been this goal for a long time now. And I think as of right now, like when we're on this, I got an email. I'm pretty sure we just passed 10 million for the first time ever. So that's pretty cool.
Deployed?
It'd be 10 million like total
originations.
Well, not originations. That's total loan balance if you include like undrawn funds. Does that make sense? So we would include that total balance. Yeah.
When you're doing, they're paying it. Are they paying, your borrower's paying interest on the gross loan, right?
Yeah.
Okay. So like loan portfolio. And I mean, that's a huge goal. And I mean, I remember when Chris and I started, that was kind of our big first stepping stone as well. You have an employee, you're at $10 million. It's like, wow, this is like a real business. Like
it's crazy about it is this time last month, we were doing big months, and we were at like 7.5, which is where I'd been for the last like half a year. But we had so many payoffs come, and then we have done over 2 million this month, which is crazy to even say out loud. I mean, usually like 1 million a month is a big deal for us.
And how many units is that? Did you do this month?
We're at 10 loans right now, I believe. Like right at 10, I think.
Yeah. No, it's good. And I mean, and you're right. Like what you said, eventually you kind of reach this threshold that is just like, hey, I'm writing all these new loans, but I'm also getting paid off on existing loans, and it takes time. I would say that from what I've seen is, because you hit that $10 million portfolio size in, just over 2 years. And I mean, when we've grown other offices, it's taken us almost darn near 3 years to do so, but which is good. Although, on your end, like it, as like, hey, this is one office, we're putting all our devotion to this. We're not diversifying our time into other things. So it makes sense. What do you think like your next big stepping stone is going to be?
Well, right now we're in big time organizational chart mode, like who's doing what within the company. Because Flint, my brother, came on in October, and there's so much going on in the business day to day. We hadn't really figured out what it is we're actually doing. So this week alone, especially, we're trying to make sure we're ready for scale. As to what scale means, we're shooting for like the 30 to 40 million thing sometime in the next 5-10 years, probably. That's kind of the end goal.
Yeah, you're on operations/execution mode. Been there. I know that feeling where it's like, hey, you have growth, and you're like, oh shit, like I need to make sure I've got the right people in place, the right processes in place, I have the right softwares in place.
Oh yeah.
And I get it. Like and that's tough. And then all of a sudden you're going to be, you'll be like stagnant again and be like, dude, like we got capability to freaking skyrocket again. And then you start doing growth, and then eventually, you got to hire somebody else, or you got to put something else. How's it been going? I know you hired your first employee. Kudos, because that's obviously a big step. And are they mostly focused on like front end processing stuff, or kind of back end bookkeeping stuff, or kind of all the above?
Kind of all the above. And I know you were very helpful through this. So they're definitely doing the front end processing and getting me out of the weeds of like gathering everything. We also have them as a portfolio manager, which works for now at our current loan balance size. Sure. It probably won't work at 15 million. And we all know that, she'll need to have someone below her, or they'll need someone, next to her. Especially probably I think our next hire is likely just a true processor that's kind of below Kaylor in our office.
Yeah. Yeah. I mean, I agree, having a processor and also having like, call it whatever, portfolio manager, accountant, bookkeeper that runs the loan servicing software day in, day out. Those two key positions are so crucial because they're so, you know, when you're in the weeds doing those things, at least in my opinion, when you're in the weeds doing those things, you stop doing your growth activities and your business building activities, your money making activities. Like, I remember like we had a conversation where it's like, I don't really want to talk to borrowers anymore. It's like, that's a natural extension. Like,
yeah, I don't have the energy, man.
Yeah. You don't have the energy, but
Yeah.
like, that's the lifeblood of the business. And like what you said, because we're very similar personality types when it comes to this, like what you said, like you get a high, you get the energy of, hey, I just sold a deal. And like that's your win of the day. And that's mine as well. To this day, like we collect when we do like due diligence deposits or valuation fees or inspection fees, we collect them through PayPal, right? And we collect $400 and that covers our overhead for the most part on that. And when I get that $400 ping, like email, whatever it is, like that's my high. I'm like, I just won the day. Like that's my win for the day. And you probably have that similar feeling. So it's one of those things that like, I agree. Like when the day comes, and I think there were some other guys in our circle group last week that had the exact same opinions and they had a similar size portfolio as you have, where it's like, yeah, like I just want someone else to talk to the borrowers. It's like, nah, I don't know. I think you want to talk to the borrowers. You just want someone else doing all this other nitty gritty paperwork stuff that you're spending.
Well, what is ironic about that is that we are actually removing me from that position. Flint, my partner, is going into that sales position. And that was, we've talked a lot about that. It's me. I'm relinquishing quite a bit of control, but he's very, very well suited for that role. We're both pretty good at it. He's very good at it. And I am probably better on like the back end processing and like organizational side of things and making like just being organized in general. So we're going to test it. We're going to see if he likes it. We're going to see if I like it, that type of thing.
What do you think your like top 3 highest level activities are going to be every day then? Because they're different than if that's going to be the case of, if you're kind of changing things up. Like, what do you, like in your head, what are your 3 top activities that you need to be doing to be a successful day?
So we're both, just like you and Chris, we're not just completely removing me or him from marketing. So we both have very specific marketing tasks to continue the growth. But from an organizational side, my job is going to be to make sure that nothing on the portfolio of our funded loans slips through the cracks, because we kind of see the business of having 2 risks. One is like the economic risk. This is what Flint says all the time. It's true. Economic risk, and then the construction risk is a big one. So one of my biggest tasks is making sure that the construction aspect of our loans is going smoothly and we're distributing funds, accurately.
When he says economic risk related to the market downturn, trends in the economy, the downturn. Okay. Yeah. And then the construction side. Yeah. And I mean, there's real risk in the quality of the borrower and the execution and things and, and things like that. But again, just like real estate investing, like you make your money when you buy, it's the same thing. Your portfolio will perform based on the amount of, how good your deal is up front. And that's just the whole marketing metrics, right? Yeah. If you get, 100 marketing inquiries a week, 100 leads a week, and I get 10, you're gonna have better deals than me. Yep. It's like easier said than done. Is there any like particular marketing channel that you've had a lot of success with?
We've not done a lot of like marketing the way you guys are. It's been boots on the ground. Obviously, the real estate meetups have been successful. Anything that involves networking and cold call reaching out, stuff that takes time, energy, and effort. I mean, that's how we built the business to where it is. But you can't go much further than we are probably now doing that, and we know that. Right. So we're looking into and starting to digest all of our options for marketing. But certainly, like if I was starting again, and this is what you guys told me to do, and I just did it, right? It's go to the meetups and it's network and call people.
Yeah. I mean, that's what builds a foundation the right way. And you can do, and that doesn't even cost any money to do that.
Doesn't cost any money.
And then it just costs time that a lot of people don't want to do.
Well, and the time part goes not only that, like reputation and referrals quickly become the lifeblood of your business.
Yeah.
Right. And doing that takes time because you got to be on your game, especially at the beginning. You've got to offer something that no one else offers, and that's going to be customer service, probably.
Yeah. No, that was our exact same philosophy at the beginning. There was an old mentality in hard money lending, and it's not as much now, but it could in the future. Was I've got the money, I make the rules, and that's like that can't happen. Like it doesn't necessarily work like that. And if that's how you feel, feel it, but don't present that to somebody, right? Because this is very highly customer service. It's very and in order to grow this business, you got to have that because you got to do repeat loans for borrowers. And like I constantly tell our other partners in other markets, it's like they're like, well, you have an unfair advantage. Like talking to me, you have an unfair advantage because all your borrowers are repeat. It's like, yeah, but it took me 10 years to get to that where it's constantly another borrower. Like at the beginning, I would guess that your repeat borrowers are probably like 50% of your business because that's what typically it takes to get to, right? But it takes time to do that, right? Because like month 1, you're not having any repeat borrowers. Month 2, maybe you have one, and then it takes time. And like that's also really where like who wants to go and grind for deals day in day out? That's like not fun, right?
Yeah.
So it's like there's the light at the end of the tunnel where, hey, do good loans for the right borrowers, and you'll continue to get them back. And I'm sure you have a very good sense of satisfaction and feelings when a repeat borrower calls you, and it also makes your life a hell of a lot easier.
Yeah. Well, it goes back to our first conversation about this not being a very passive business. If you don't have a good reputation, you're not going to get the repeat borrowers. And if your loan terms are 12 months, in 12 months, you don't have a portfolio anymore. You always are going to have to hustle. You might as well hustle customer service so they come back to you.
Yeah, exactly. And another like kind of misconception is I think a lot of folks are like, I got lots of deals. I just need to go raise the money. And like, there's lots of different ways to get capital for these deals, but I think both of us can probably promise anybody listening that if you have a good enough deal, like all high net worth individuals and everybody that has capital want to deploy their capital. They understand that they want to deploy it. They want to get a good, secure, high interest rate return. And if you have a good opportunity, you can do it. And I mean, that was exactly what happened with us. I felt like we didn't know anyone that had capital, and we would talk to a few people, and not that it was easy, but we talked to a few people and they're like, yeah, based on what you're telling me, like they got good credit. They're bringing a lot of cash to the table. It's a good asset. I'm a first lien position. Seems like a no brainer. Go find me some deals. But it was challenging to go find those deals. Yeah. Especially over and over and over.
And maybe one of the hardest challenges is to not just do every deal that you see, right?
Yeah.
Because you if you went out and just do 100% financing and lend, you'll have as many deals as you want. If I did that, my portfolio would be 20 million right now, not 10 million.
Yeah. Well, we just had a capital investor in here with his son-in-law, and when we were just talking about business and growth, and I was like, listen, if I want to do twice as much volume, all I got to do is up my leverage and lower my interest rate.
Yep.
Just like that. But guess what? I'm out of business in a year.
Yeah, right.
Like you have realized losses. Like a lot of hard money lenders even if they've been in the business for a while, they don't even have realized losses on their books. So they don't even realize that they're writing bad loans.
Yeah.
The market has done nothing but gone up for a long period of time.
Yeah.
And you could write a bad loan over and over and over and over, continue to get paid on it when you're like, yeah, this is a good deal. This is how we've always written loans.
Yeah.
When in essence, that's not the case. So, you learn from it, and it takes time.
I've definitely written bad loans and been bailed out by the market. My borrowers have bought bad deals and they've been bailed out by the market. Yeah.
Us too.
Yeah.
And that's fine. And guess what? As long as you recognize that and learn that, that's the important part. If it was like, oh yeah, the market's always going to go up. You know what I hear? Oh, you're in the Washington, D.C. area. The market always goes up. It's like, because you got insulation from the government. Not necessarily true. And not that, some areas aren't better potentially to be lenders than other areas. That could happen, right? Like it happens that, we're at a higher price point, median housing price. So that makes life a little bit easier. That's right. But I mean, what's your average loan amount? Still like,
we're about 160,000.
160. Yeah. So it's good. Like there's real money to be made. In that. So related to like, how do you see your role inside the business, like kind of moving forward? Like, what's your kind of dream day look like?
My dream day. Well, I can tell you that Flint and I are both working towards a process that allows us to do basically the whole business from our phone. Like that's kind of our goal when we're designing everything.
Great
Because I
goal.
do so many inputs on our software, right, on a day-to-day basis. And Flint was doing so many inputs on the thing. So like that's our first goal. So to me, that's the light at my current end of the tunnel is like, can I get an email that has all of the pertinent information concise from our processor internally. We can make quick decisions and have the business operate when we're not sitting at our desk in the office.
That's a good way to do it. I never thought about it that way, and I actually probably could do that currently inside our operation if I chose to. I don't. Minus like the business growth stuff where it's like, hey, I'm going to create a marketing campaign or a direct mail campaign or a slide broadcast campaign or something like that. Because, I have a portfolio manager in our office, Terry, who's, I've been very vocal, has saved my life when 10 years ago when she started, because, I was nervous about that position, right? I was myself and Chris. It was you and Flynn at the time. And it's one of those things where it's like, they're not gonna be able to do it better than me, or whatever the case is, or I'm gonna have to train them and do it this way, and things are gonna slip through. And my business coach at the time gave me the confidence to do it. And they're like, well, what happens if she's like 80% as good as you and you don't have to do anything, she can do everything? Or what if she's 90%? Well, she's 120% better than me. So so that was easy. But like, for instance, if I wanted to, repeat borrower reaches out to me. I guess for the most part, I do pull comps on MLS regularly. So like I am on MLS a lot, but like, let's say it's a repeat borrower and they're putting a lot of money down and things like that. I can, for the most part, send her a text and be like, hey, we're doing a new loan for so-and-so, 200,000 purchase, 30 in construction, closing next week. And like, in theory, she could run the whole thing for me, which is great. Like that is I think your goal is a really good goal, to be set up. And again, for business growth, as you're still in business growth purposes, like that's challenging, but it's definitely a good goal to get to.
Yeah. We don't know if it's possible now that I think about it out loud, but that is the goal. I have no idea if it's possible. We'll see.
Yeah. Listen, do you look at this as you want to, will this always be an owner operator business model to you? Okay.
Yeah, I fully believe that. Maybe that's because you've ingrained it in my head, but like, I don't think we can totally ever replace Flint and Chris as like the head of the business. We're going to try to do it as much as we can so that things can still happen if we're on vacation or something and we're not having to work. But you put it best. Like at the end of the day, people want to talk to the decision maker. Like they want to talk to you, they want to talk to me, because they don't get that when they go to the bank. They don't get that when they go to the institutional hard money lender.
Exactly. I agree with you 100%. When you started this business, did you look at this as an investment vehicle for your personal cash?
No, because I started this business. I was like, it'd be amazing if I could figure out a way to get 500,000 out on the street, just pay the bills. Yeah. But now, certainly. Yeah.
Yeah. But like, that's because I think a lot of lenders don't realize it. And that's why, not that I'm a naysayer on institutional lenders and stuff like that. It's just a different business model. It's apples to oranges. But like, that's where I always feel they're missing the boat. Like, you get in this business because it's a massive wealth machine for you and your family, or people you're deploying capital for. Because if you're, whatever, like in our business, we lend money out at 10%, or we're lending out at 13%, 13 and 3, but it's like, our capital investors are getting 10%. So if the loan's out for whatever, 6 months, they're for the most part getting half, we're getting half. Now, it ends up being 16% annualized. You roll the money maybe once or twice a year plus some late fees, it's 20%. Well, if I'm the one that puts that $200,000 in with my own personal cash, I'm getting the 20% instead of half of that. And, Chris and I, it took us 3 years to learn that, right? It took us 3 years to understand that, because we had a capital investor, high net worth individual. He had, it was I think it was the end of year 2 or 3. I don't remember, but he got a 1099 INT for like $50,000. He had a few $1 million deployed into deals with us at the time. And we're like, God dang it. This dude's making more money than we're taking out of this business. And he doesn't even know what deals he's in. And we're slaving full time on this business. So like, that's when Chris and I pretty much went all in. And we're like, every freaking dollar we take out that we're not living off of is going back into hard money loans. And
so do you guys allow each other to invest at any point in a loan? Like any amount of money you wanted to put in, you can?
Absolutely.
Even if it's uneven?
So if it's uneven, you can just take a 10% return like any capital investor. The way that we do it internally is like Chris and I have been business partners on everything since like the beginning. So like our household stuff is very similar. Our tax returns are very similar. We each get the same K1s, ownership percentage of almost every business. So it's easy for us because we have about the same amount of money deployed into loans. So we each get the full note rate. Okay. Right. For our lender accounts on it. So if we do a deal and, whatever, we usually put our money into the same deals together, but we'll each get the full note rate. But let's say it was lopsided, then, whatever, my lender entity would just get a 10% return, just like James Smith's random person.
Yeah, that makes sense.
That's a good way to do it. And then the company would just continue to get a servicing fee. We just forgo the servicing fee with our own capital.
Sure.
So that's always been a fair way to do it. But like, that's our game plan. Like, we diversified into other assets and other things. Yeah, we are. But a big chunk of it is in loans. And that's the game plan. It's something that, something you're an expert in, something that you can control, high, rate of return. So I just like to ask that question related to the investment vehicle, because I think it's like, it's not even like an added benefit. It's one of those things that's like, this is part of this business is to turn this into an investment vehicle. And not that, listen, if someone was willing to buy a company like any of ours, there's always a price that makes sense. Don't get me wrong. But that being said, like, this is a long-term wealth building machine, right? Like, your company approach lending, could get passed down from generation to generation. You could be the capital, however you wanted to have it set up. Like, hey, go find deals. And as long as you have opportunities to lend out, you're going to have a cash flowing machine forever that most people are super envious of. I think a lot of people don't even realize how like jealous they are that it's just like you have an endless cash machine, or an endless investment vehicle, I should say, where every, in essence, whatever cash available you have, put into that and it spits out a return as long as you do it.
Yeah, I did a lot of like stock investing before this. Yep. There's no way I would invest in any stock company over investing in one of my loans today. I mean, the control and just the belief in what we're doing, low leverage real estate.
That's right. I mean, again, you're never going to outperform, 20% returns, but you don't necessarily need to either, right? Like, you can get into something, you can flip a house and you can make a lot higher return, especially if you get it leveraged. And if that's the model you want, that's a different type of active business that works. But like, we're such huge believers in all of these deals. Obviously we're not ever doing a deal that we wouldn't put all of our own money or your grandmother's money or your sister, whatever it is, capital into. That's part of it. But like, that's the game plan. It's like, hey, make money, put it into the freaking machine, get passive income from it, put it back into the machine. So I think we have the same approach. And
I like what you just said. I need to add it as an underwriting checklist item. Would I put my grandmother's money into this loan?
Yeah.
Maybe that's the final test for approval.
Exactly. I mean, if you cherish your grandmother,
that's right. You have a good relationship with her. Yeah.
No, but that really is what it was. And like, I mean, when we started this, we didn't have any of our own capital into these deals at all. And that was definitely something that, like, I guess we told ourselves, and like, I want to think like that's the truth, but like, it ended up being, because we really haven't lost money on any transactions. But like, that's the mentality you got to have. And, going back to what you said of kind of being an owner operator business, I agree with that as well. Like, we look at this as an owner operator business, but like, it's just good to have a pulse of what's going on inside your business every day. And I know you have a great pulse.
I'm too OCD not to. I'm too OCD. We're having to try to get me away from having too much of a pulse on the business.
Yeah. Well, the good news is you'll you'll put the right person in place. You might already have that person already, but you put them in place, and then you manage them, and you trust, the data that they're providing you. And I mean, I know we've talked about, do things slip through the cracks? Yes. Hopefully there's small things, not big things, but you put checks and balances, and, you put things in, compliance controls in place, one of the things, and I think you guys do this as well, but like one of the things that we put in place that I think has been very, very helpful, for like wire fraud and things like that, is like to hold each other accountable, is like when a deal is ready to close, our portfolio manager has to send to our controller who does the wire instructions, the paid receipt for the insurance, and the HUD and like the final HUD one, right? So, and we're all CC'd, right? So it's like, those are the documents I'm gonna look at as well, right? And then Chris approves the wire, I approve the wire. We're holding each other accountable, knowing that the insurance is in place immediately and paid for. And if anyone wants to get their hand on the HUD, you can do so. Not that you can't access that data elsewhere, but like just little things, like that, to make sure things are always kind of in
little
place.
Final checks, right?
Yeah, little that right now is just either, and the challenge you probably have is, well, some of these things might even be in your head. Not that they're not documented somewhere, but they might be in your head. It's like, well, how can I take my head and put it in my employee's head? But like you document it.
Yeah. I want to talk to you more about that off air, because this week we're blowing up our entire procedure system for underwriting, from application to closing, trying to make everything more efficient and all of that. That's interesting what you just said about the controller and CCing everybody.
Yeah. And then you try something. If it doesn't work, you try it again and you do it. I mean, there's no better way to do it than hands-on experience like you guys have right now, right? Yeah. Like you even said, it's like, hey, I did a bad deal. The market saved it. Great. What are you going to do in the future so a deal like that doesn't slip through? More cash down, whatever the case is.
Hey man, I was doing 100% loans before I met you, and then you told me don't do it, and I thought I'd never get a loan again.
Yeah, and now you're doing multiple loans, and I'm gonna tell you to go tell them to put another 10% down more than you're already putting down, and you'll tell me to F off.
Yeah. Nice.
Cool. No, that was a great conversation. It's awesome to interview and just kind of chat about. We can call this a success story. This has been a really good success story that you've had over the last 2 years. So I like I like hearing about it. I like watching it in real time. I think you definitely shared with the audience a lot of good stuff. If someone was like in your position and they're maybe looking for a business to start and they wanted to do private lending, like if you were starting over, like what are a few things that potentially you'd recommend them do?
If they were starting over, trying to become private.
Well, not necessarily starting over, like starting from scratch, where they're like, because I get this question a lot from people, like, hey, I like hard money. I don't want to be a real estate investor anymore and flip houses. Yeah. Not that I don't know where to start, but like, what do you recommend? Like, what are the things that I spend time and energy and money on?
Probably going to like real estate meetups, finding some people that you would invest your own money in their deals that is really good at flipping houses or whatever it is in real estate. Try to work with them to start small, make sure they have skin in the game, and be organized. No matter what, be organized. Yeah. Just
find really good deals all the time, meet a ton of people, and
Yeah. I mean, the biggest risk is that you're going to jump in the deep end too quick, right?
I agree.
And everyone you meet is going to tell you they're getting better financing, higher leverage, like you said, and whatnot. You just got to stick to your guns. It's not a good idea. Not a great answer to your question, but
no, I get it. I agree. Like, people ask me the question, like, hey, what's one thing that if you had to start over from scratch, what's one thing you would do immediately? Go find deals. Market. Go find deals. Everything else will work itself out.
Exactly.
At some point. If you don't have a good deal, nothing else is going to happen. Awesome, Chris. Well, I certainly appreciate this. This has been great. What's kind of the best contact info or website if anyone's watching or listening and wants to reach out to you?
Nice. I get a marketing pitch, huh? You can go to our website, approachlending.com, or you can email me, chris@approachlending.com.
And what areas are you currently lending in at the
We're doing basically Nashville and East Tennessee. So Chattanooga, Tri-Cities, Knoxville, Tennessee, Cookeville, Nashville. And we do some time to time throughout Alabama, Georgia, North Carolina.
Yeah, I was going to ask, any plans for expansion, as good opportunities come in, or just kind of see where that goes.
We have our eyes set on North Carolina and Georgia currently. Not the whole states, but certain cities within it. Yeah.
Awesome. All right, Chris, I certainly appreciate it. Thanks, everyone who was listening or watching the Private Lenders podcast. We certainly appreciate it. And we'll see everybody next week. We hope you enjoyed this episode of the Private Lenders podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.